everyone, welcome to Wiley Capital. Today we are doing a session about how we can safeguard our investment from falling bank fixed deposit rates. And I'm so happy to do this video along with my boss, Mr. Rajesh.
Hi all, welcome to a very special edition of Wiley Capital Investor Awareness video. Everybody know that yesterday RBI Monetary Policy Committee has come up with its decision, and as expected the rates was unchanged, repo rates and all other related rates was unchanged, but RBI has announced some measures to boost liquidity and to enhance other related economic activities. So this week is a special week for the investors, since the International Organization of Securities Commission launches the 4th annual World Investor Week from October 5th to October 11th, 2020 to promote investor education. So obviously in India, everybody knows that the major chunk of investments is still lying in bank as fixed deposits, and in particular in Kerala, since I know the fact that almost 80 to 90% of our asset class is still lying in banks as fixed deposit. So if we look traditionally, around 3 decades ago the interest rate was hovering around 16 to 17%. To be precise, in the year of 1990, the interest rates in banks for fixed deposit was 16 to 17%. In 2000, it got reduced to 13%. Subsequently, in 2010, it came down to 10%. So everybody knows that right now it is around 5 to 6%. So cutting the long story short, what I am trying to convey is the fact that traditionally interest rates have been coming down around 3% in every decade. So by the year 2030, in all probability, it will be around 2 to 3%. So what I am trying to convey is the fact that any investment which guarantees around 6 to 10% for the next 10 years will be a real fortune for the investors. So my humble request to all the investors would be, please think of reallocating at least a part of your savings or investment from your fixed deposits to other asset classes which can deliver a highest return of investments for your hard-earned savings or hard-earned investment.
We always know that the investment preferences and the asset class growth keep on changing according to the various external factors. So there are some points which should be remembered always. First one, invest in the right asset class. Second, diversify your investment. And third is hold on long term.
We all know that the current COVID pandemic is obviously playing a spoil sport in the world economy, and India is obviously not insulated either. Despite that fact, and a bad news of FY21 first quarter GDP contraction of 23.9%, some green shoot is obviously started seeing in the current Indian economy. The best example being our GST collection in the month of September has clocked a whopping 95,500 crores of rupees, which is even above the FY19 September figure. So in short, right now we are a $3 trillion economy, and in 4 to 5 years India will become a $5 trillion economy. So everybody knows that it has to be reflected in the equity and obviously in the debt market and as in the economic front as a whole. So I advise or rather suggest the investors to get benefited out of it.
So we take this opportunity to suggest some investment options which would definitely outperform the current bank fixed deposit rates. The first one is a combination of debt, equity and SIP. By investing a 10 lakh in debt fund and keeping the fund as base fund and doing daily SIP to equity fund for a tenure of 5 years would be the best option to generate a return of 12 to 13% per annum.
So as Tirtha suggested, this option is a combination of debt, equity and obviously SIP. So the power of compounding, rupee cost averaging, 8 to 9% return from the debt fund and equity growth, everything works out in a perfect combination to generate something which is almost means more than double what the current fixed deposit gives you. So it's as simple as a bank fixed deposit. You have to invest only one time. We took this 10 lakhs as an example, since this can be done as a daily SIP for the tenure of 5 years. Means if we calculate a 21-22 days in a month where market functions, so comfortably the SIP amount will be sufficient enough, since the debt fund itself generates almost 8 to 9%. So it should be sufficient enough to complete a tenure of 60 months SIP. So in short, it's very simple. You have to invest only one time. Let debt fund and SIP work the magic, and after 5 years definitely you will enjoy a per annum return of more than 12 to 13%, which I am definite.
So in the beginning, we emphasize the importance of diversification along with debt and equity. You must consider other asset classes like gold, real estate, pharma fund and traditional insurance. There are options in insurance plan to get a return of 8 to 8.75% per annum for the next 10 years guaranteed. Along with this growth, it provides ample insurance cover and ATC tax benefits which make this investment options worth considering.
So as we mentioned about the customer diversification on investments, Viral Capital also diversifying or expanding its business to health and wellness industry also. As you are already aware, we are the official marketing partner of Kenza Wellness, which is scheduled to be inaugurated, the #1 wellness hospital in the country in the month of December 2020 in Wayanad. And along with that, we are associating with a beautiful concept called India's first medical mall, which is scheduled to be inaugurated in the month of November. So let me tell you one thing on this part. I have always projecting Corona as an opportunity rather than an obstacle. So due to this Corona pandemic, the importance of health and wellness industry, which is booming at a pace of more than 20 to 30% per annum, it's a sector you should everybody should worth considering. So there are two investment options which Viral Capital provides to all our potential investors, which guarantees a fixed dividend of more than 6% and a great profit share and an assurance of capital appreciation once in every 3 years. And apart from that, there are other benefits of free medicals for the entire family, discounts in the particular medical mall and obviously in the Kenza Wellness Hospital. And of course, in the medical mall project, we are assuring a job placement for the shareholders. So we are inviting all our potential investors to be a part of these two beautiful concepts, wherein you are supposed to be a stakeholder an owner of India's first medical mall and India's #1 wellness hospital. So please do consider it. I am assuring you something which I have personally invested in both the projects. We have personally invested in the name of Viral Capital. So as I always project, whatever the investment which I promote, I will always verify that is it worth considering for myself. So on these two projects, let me assure you, my dearest viewers, that both these projects are worth considering, since I have verified it in detail and I find out that it's worth considering, it's profitable, it will produce more jobs to the in this COVID pandemic. Already everybody is suffering, like, so we would be happy to produce some jobs, and of course we are contributing something to the society, and of course it will add up to the GDP of our country also. So let me rewind the three options which we suggested for our viewers or for our investors to have a look. In the beginning we mentioned about the interest rates are falling, and by 2030 in all probability it is going to touch 2 to 3%, which will not cover the inflation at all. So we are requesting you to reallocate a part of your money from the fixed deposit, if not full, to different asset classes, which will definitely provide more growth than the current bank fixed deposit. The first being a beautiful concept which involves debt, equity and SIP, keeping a lump sum fund, a one-time investment in debt fund as base fund. You have to initiate STP, systematic transfer plan, which is a one-time procedure. You just sign it once and the entire procedure is being conducted automatically for the next 5 years. So you have to invest at 10 lakhs and initiate an STP, which will function as a daily SIP to an equity fund for a tenure of 5 years, which will definitely provide a return of 12 to 13% per annum. The second being other options like gold, pharma funds, real estate, and in particular we talked about some insurance options which are guaranteeing you a 8 to 8.75% return, along with your means 10 times of the insurance cover, which is ample for you to get a life cover, and on top of that, as an icing on the cake, it provides you ATC tax benefit also. So I am assuring you, which is something which is like 3 times of a bank deposit in total. And finally, we mentioned about the two projects which Viral Capital are currently involved with. One is Kenza, the #1 wellness hospital, and obviously the medical mall, Lifeonic Medical Mall, which is going to get inaugurated in the month of November end.
Now let's have a look into the RBI monetary policy outcome which got announced yesterday. MPC decides to continue with accommodative stance. MSF rate, bank rate and repo rate remain unchanged. MPC votes unanimously to keep policy rates unchanged.
Global economic activity has rebounded in Q3. The MPC committee announced that, albeit unevenly. Indian economy entering a decisive phase, seeing easing of contraction in various sectors of economy.
Deep contractions of Q1 are behind us. Silver linings visible in easing caseloads across India. Rural economy looks resilient.
Food grain production set to cross another record, back to life. Mood shifting from fear and despair to hope, obviously.
Inflation will ease closer to target by Q4 FY21. Forward-looking business expectations are optimistic. GDP growth may turn positive by Q4.
MPC committee mentioned that India is likely to see a 3-speed recovery across various sectors. MPC see FY21 GDP contracting by 9.5%. Weighted average cost of borrowing in H1 FY21 is at 5.82%, lowest in 16 years.
Faster, strong rebound is feasible, ready to undertake steps as necessary of access to liquidity and easy financial conditions, infusing liquidity to ensure non-disruptive manner.
will conduct special and outright open market operations, that is OMOS. RBI to up weekly OMO purchase to 20,000 crore, which is a very good news for the market. Ways and means advance WMA limit for central government kept at 1.25 lakh crore. Automated borrowing forced by fiscal stimulus and falling tax revenue. Market participants need to factor in RBI signals while buying bonds.
Expect retail inflation to remain elevated in September. Ease over Q3 and Q4 aggregate demand remains subdued.
MPC has decided to look through the current inflation as a transient hum to conduct on-tap TLTRO of 1 lakh crore at floating rates linked to repo rate. TLTRO funds to be deployed in corporate bonds, debentures to extend held to maturity, that is HTM, cap hike to March 31st, 2022. To conduct open market ops in state development loans, that is SDLs.
OMOs in SDLs to rationalize their spread over G6. To discontinue system-based caution listing of exporters. To allow banks to increase exposure to retail small borrowers to 7.5 crore.
To rationalize risk weights for all new housing loans until March 31st, 2022. To extend scheme for co-lending to all NBFCs, HFCs. Propose round-the-clock availability of RTGS from December 2020. Payment system operators to be licensed on a perpetual basis. So, reminding our viewers about the falling bank fixed deposit rates, please reallocate at least a part of your investable amount which is lying in the bank fixed deposit, which the rates are keep on falling. So let me humbly request you to reallocate a part of your investable amount from the current bank fixed deposit to other asset classes, which will definitely give you higher rates than the current bank fixed deposit. Thank you so much for watching Viral Capital. Please do continue to help us, support us. Tirtha.
Thank you so much. Please do like, share and subscribe.